Hello, you're watching Proactive London. I'm joined by Tom Bailey. He's head of research at Han ETF. Tom, very good to speak to you today. And of course, this week is the first anniversary of your Future of Defence UCITS ETF, or NATO as the code is. So a big moment.
Yeah, it's great. Fund's 1 year olds almost. It's been a kind of strong period of growth for the ETF on several fronts, both performance and AUM. I mean, so since launch, we've gathered around 400 million into the fund, so that's very positive. And really, the investment case behind the ETF seems to constantly be reaffirmed with what we see in the news, with growing tensions globally, new commitment for defence spending, particularly from European NATO members. And also we've seen in the UK elections ongoing right now, the topic of defence spending become obviously a talking point, or not a huge one, but still a talking point in that campaign. We've also recently seen Germany surpass the UK in terms of defence spending. So that's a real shift from kind of perceptions a few years ago in terms of Germany's commitment to spending on defence. But at the same time, it's not just about the strong potential for this investment theme. We've seen a major rethink among investors around investing in defence. A few years ago, some investors would have been kind of skeptical or hesitant to invest in defence companies as the ETF provides exposure to, because of this kind of idea of maybe investment funds, houses might want to avoid defence, kind of just reputational risk. But we've seen a real rethink, and we're seeing growing interest across the continent and in the UK. Whether that's from retail investors who obviously identify the theme and invest, but as well as some of the kind of big, more conservative institutions, life insurance companies, German local savings banks, who in the past would have kind of shunned defence as something they shouldn't be investing in. So it's great to see this kind of growing acceptance of the investment theme, whether it's the arms industrial companies which have in the portfolio, as well as the important component with the cyber defence, cybersecurity part of the investment fund.
So, I mean, you mentioned a few of the points then, but how has the theme developed since the launch a year ago of NATO?
Yeah, so, we've seen, obviously, when we launched it, it was no secret that there was kind of this growing sense of a great power conflict, tensions between the US and Russia and China, and various active conflicts. And obviously, we've seen the growth of conflicts, unfortunately, around the world since then, and kind of more concerns about escalation. I think one of the big developments, particularly around this ETF, because it's focused on the spending from NATO countries. So for companies to be included in the ETF, it has to be NATO domiciled, and it has a kind of good showing among European defence firms. I think one of the big developments over the past year has been this growing prospect or rather the kind of growing concerns around what a Trump presidency might mean for the future of NATO, the alliance, not the ETF. And what this sort of kind of, obviously it looks more and more certain potentially that Trump will win the election. Obviously can't know for sure. And at the same time, there has been over that period growing concern about Trump's actual commitment to NATO itself as an alliance. And while it's still kind of a very small prospect, we think, of, say, the US pulling out of NATO, as some are speculating, it being a risk, it's still obviously something that is being talked about in the halls of Brussels and other European capitals, and forcing European nations to kind of get more serious about their defence spending, and to imagine a world where the US is perhaps not an integral part of European security, and what the Europeans need to do to address that and ensure that they're spending enough and have the capabilities to defend themselves in such a world. So I think that's been one of the major developments. We've seen therefore kind of some of the strong performance particularly come from companies like Rheinmetall, German arms maker, which recently signed a big contract with the German government to supply new shells. So we're seeing definitely a lot of the performance in the fund over that past year has actually come from these European names in the ETF. Obviously kind of suggests that growing need for European defence.
Give us some of the unique selling points of the NATO ETF, Tom.
Sure. So I kind of mentioned them a little bit, but it's worth explaining them perhaps in depth. So I think the first key USP, which is reflected in the ticker of the ETF, NATO NATO, and that really is because what we try to do with this ETF is ensure that the exposure it provides is to NATO members. And so there's several reasons for this. But so the first kind of thing to note is to be included in the ETF, the companies must be domiciled in a NATO member or NATO plus member country. And there's two reasons for this. The first is, defense is a potentially controversial area. And we are in a very geopolitically fraught world. And the one thing we thought investors want to ensure is they're not getting exposure to defense companies which might be based in questionable or irresponsible geopolitical actors. So by ensuring they're NATO only, we think we kind of reduce that risk. And at the same time, the NATO focus itself, we think, is a potential positive from a performance perspective, given that if you look at the particularly European NATO members, they massively cut their defense spending in the 1990s after the Cold War. It started to pick up again in the 2010s with the initial invasion of Ukraine by Russia, and also some pressure from the US. But really, this is kind of one of the key growth areas of defense spending. We think is this rearmament of Europe in light of both the war in Ukraine and as well as the kind of questioning of the reliability of the US as a security partner. So by providing exposure to these NATO domiciled companies, we think we provide better exposure to that. So hence the ticker being NATO. And at the same time, another USP is our strong showing of what we call cyber defense companies in the portfolio. And the reason for this is recognizing that cybersecurity is really the kind of new domain of defense. There's a constant shadow war going on in the background. Before hostilities, without any hostilities, countries which might not be engaged in outright hostility with each other are still engaged in espionage and disruption. And we see all these different news stories of this happening around the world, whether it's, say, with Israel and Iran, both heavily kind of lean into the shadow cyber war of each other. At the same time, with the US and China, Russia and European countries. And so cybersecurity is actually a key part of defense, which kind of other historic kind of defense funds may have missed in their inclusion. So we wanted to make sure it had a good showing in it. And I think one of the interesting parts of the kind of cyber defense, cybersecurity aspect of the ETF is that if you consider, so if we say cybersecurity, cyber defense is a key part of national security these days, because what you have is geopolitically sponsored or motivated hacking groups carrying out espionage or disruption, often against private companies. Those private companies themselves are required to actually coordinate and spend on their defense themselves in a way that no other part of national security is. And so it's a key part of kind of national defense, but it's also being driven by the private sector. And therefore, we think it kind of has a good role to play within the NATO portfolio.
Well, Tom, congratulations again on that 1-year anniversary milestone. It's a theme I'm sure we're going to be chatting about in the year ahead as well. But thanks for your time today.
Thank you.
That's Tom Bailey. He's the head of research at Han ETF.